welcome to the weekend edition of Buy Now, Sell Now. I'm Mubina Kapasi.
Hi everyone, I'm Avan Dubash, and what a historic week it's been for the equity markets. We've conquered some very crucial levels on the upside, and 94.50 as well was managed. But let's tell you what's lined up today on the show. We will be addressing all of your stock queries, so we'll be talking about Ashiana Housing as well as Vedanta today on the show.
And of course, later during the show, we will be addressing your individual portfolio queries.
Okay, time to bring on board our experts, and joining in on the technicals, we have with us Ruchit Jain of Angel Broking, as well as Mr. G. Chokalingam, who joins in on the fundamentals. Gentlemen, thank you so much for being with us on the show. Well, without any further ado, let's get to our first query for the day, which comes in on Ashiana Housing. This question has been sent in to us from Lakshmi Durai in Chennai. The question is, please could you advise me about investing for a year or two in Ashiana Housing and Motilal Oswal? So two stocks that she's set her eyes on and now wants to know if it's a good time to put her money into. In fact, let's also get in a perspective as to where Ashiana Housing is currently trading at a level of about 227, but there's been a lot of news with respect to affordable housing, how this would give a big thrust to the overall sector. The macroeconomics seem to be improving, and by and large, if you look at least at the real estate pocket, it's been on fire. So Mr. Chokalingam, in light of all of this, do you think that for a 1 to 2 year time horizon, this is a good stock?
No, I don't think so. Rather, I would suggest a sell. The price to book value is more than 3 times, and if you look at the PE, it is very exorbitant level. I do agree with you on this. Affordable housing is going to get a lot of boost, but then let us not forget the fact that a lot of players are getting into this because high cost housing sales are going down quite badly. So therefore, I would suggest a sell on Ashiana Housing and buy Jet Airways. I am very comfortable with the Jet Airways because on 1 year forward earning, it's available in single digit PE. Moreover, I firmly believe that the oil price is unlikely to rise significantly in the next 1 to 2 years. So this airline company would be a major beneficiary of cheap oil.
Okay, so Mr. Chokalingam is actually advising that you'd rather choose a Jet Airways over an Ashiana Housing. But what about Motilal Oswal, Mr. Chokalingam? Because we have seen that stock rally considerably in the last couple of sessions. So how do you see this one? Do you think it's a good investment advice?
If investor is holding, they can definitely hold because whole NBFC pack is going through a thematic run in the market. So in the short term, one can hold the stock.
Okay, that's the call coming in on the fundamentals about both the stocks, but let's also get in a view then on the technicals. And I want to come to you, Ruchit, on Ashiana Housing first up. Mr. Chokalingam isn't all that convinced. What about you? Do you think that it's a good stock to have in the portfolio?
As far as entire housing finance space is concerned, in last 3 months we have seen a good uptrend in this entire sector as a whole, and we believe that it's a longer term uptrend which can be seen on the weekly and the monthly charts of many of such stocks. Talking about Ashiana Housing, this stock had formed a double bottom pattern around 120 levels. Post that, it has been forming this high top high bottom structure, and the good thing is that if we observe the weekly or the monthly charts, then this entire up move is more or less an impulsive up move. So I believe that although in near term there could be some pressure coming in the stock because it has been trading around its previous resistance zone. So I think that, but I don't think that there would be much of a corrective move. Around 200, the stock has very strong support in form of 20 EMA on the weekly charts, as well as the previous highs resistances which were crossed, which I expect to act as a support now. So my advice would be, though, in case if he's looking to get into the stock Ashiana Housing, he should wait for some corrective dip. Around 200, I think the risk reward ratio would be very much favorable to enter into the stock. He can then keep a stop loss below 180 and expect a target again around 245, 250 in 4 to 6 months of time frame.
All right, that's the word coming in on Ashiana Housing on the technicals. But Ruchit, what about Motilal Oswal? We have seen quite a run up in that stock. Do you think that can continue?
Of late, Motilal Oswal Financial Services, this stock has been has been riding this uptrend and has been in fact one of the leader within this sector. But I think the way charts have panned out, it's difficult to get into entry point as of now. The risk reward ratio won't be that much favorable. So probably if he is looking to get into a stock then I would rather recommend to get into a Cholamandalam investment. This stock has been forming high top high bottom structure on the weekly charts, and even the momentum readings are indicating a longer term uptrend, probability of longer term uptrend in this stock. So around current levels also he can look to invest in Cholamandalam investment. keep a stop loss below 1025, and we are expecting target around 1250 in about next 3 to 4 months of time frame. And once that 1215 is crossed, we can expect much higher levels around 1360 to 1380 range if he has a time frame of about 1 year.
Okay, there we have it. Your advice on Ashiana Housing as well as Motilal Oswal is now being answered. Well, let's move on and bring on board our next query. It's coming in from Dheeraj Shadija from Nasik. Now, he says that he has bought 120 shares of Vedanta purchased at 118 rupees per share, and he wants to know whether he must continue holding on to this investment or should he sell it off at this point of time. He has a long-term time horizon. Well, he's making a good amount of money over there. He's been able to catch the stock at the right price at 118 rupees. He's now sitting on profits because the stock is trading at 235 rupees. Mr. Chokalingam, in light of the fact that we have been seeing base metal prices crack quite a bit in the last couple of months, do you think he should still hold on to Vedanta?
Yeah, you can still hold on to, for a marginal upside, anywhere around 260, even 270 possible, because you are right, in the last few weeks there have been a moderation in the resource and metal prices, but year on year basis still most of these metals and resources prices have gone up, including oil if you compare with the year on year basis. And second, the company has been quite lucky to get Cain India being merged with it, and Cain India, all of us know the kind of cash it has. And not only that, recently Hindustan Zinc also awarded a huge special dividend. So Vedanta is the biggest beneficiary of these cash inflows. So considering all these facts, I think in the short term there is further upside. So therefore he can hold the stock.
Smart stock to have on the fundamentals. Continue to stay invested. Richard, let's get in your perspective. Talk about the last 1 week, and the stock has been on fire for sure. The fundamentals really seem supportive. The investor here is making some money. What's the outlook? Do you think that it's good to go for more?
So of late, most of the metal stocks we have seen have corrected in last couple of months. But if you observe the longer term chart, then definitely most of the metal names are in a longer term uptrend, and this corrective move just seemed to a correction within an uptrend. And definitely looking at the buy price of Dheeraj, he is a long term investor, and post the recent correction, most of the metal names, said Vedanta, Tata Steel, are trading near the long term support zones. So I think he should not worry much about his investment in Vedanta. He should continue to hold these shares. There is a higher probability that this stock, once this corrective move is over, they would resume the uptrend, and Vedanta in fact has potential to again move higher up to 270 to 280 in next 6 months of time frame. So my recommendation on Vedanta to Dheeraj would be to continue holding this stock.
Okay, that's the advice coming in. Vedanta is a stock to have in the portfolio as of now. That's the cue from our experts. On that note, we'll slip into a short break right here on the show. Do stay with us. Come right back as we will be discussing Vinay's portfolio when we return. Portfolio Advisor segment. Vinay, it's your lucky day. We will be discussing your portfolio today on the show. Let's quickly walk you through the kind of stocks that he has as well as his profile. He's 35 years old. He's in the services sector, and he's got quite a number of stocks, mid as well as large cap, in the portfolio. Let's start off then with the stocks that he has from the large cap space. HDFC Bank, 300 shares at 1345. PVR, he's fetched close to 300 shares, bought at about 1250. Moving on then, there's DHFL in the portfolio. He's got close to 1,000 shares, bought at 300 rupees. There's Asian Paints in the portfolio as well, 350 shares at about 1,100 bucks. Lupin, he's got 150 shares at 1210. That's not where it ends when it comes to the pharma pack. He's also got Aurobindo Pharma, 700 bucks. He's got close to 250 shares. Moving right on, there's Astra Micro at 120. He's also purchased Alpha Geo, 100 shares at 945. Gen Irrigation, 1,000 shares. He's picked that up at a price point of 90 rupees. And moving on, he also has TRF in the portfolio at 260 rupees. Power Grid, 500 shares have been purchased at a price point of 200. And finally in the portfolio is PNC Infra, 700 shares at 145 rupees. So clearly there's a mix of large and mid caps. Mr. Chokkalingam, let's get in your advice. How do we improve the earnings on this portfolio? Start off with HDFC Bank, a stock that I'm sure a lot of experts would say should be in everyone's portfolio. What's the outlook on PVR, one of the most coveted stocks within the media space, and DHFL, do you like it at 300?
Yeah, just briefly 3 points before going into individual stocks. He's a very rare investor. He's talked about holding the shares for 15 to 20 years also. So therefore, my advice to him may not be applicable to general investors. And second, just 3 stocks he has invested 70% of the portfolio value, which is not advisable. And these are the two major points I just wanted to highlight. And my suggestions are based on the long-term investments. Now, coming back to HDFC Bank, I think he is absolutely right. He has categorized it as 15 to 20 year stock. Definitely, he should hold for very long term. Price to book value around 4.5 times, and if bank can grow even at 15%, in next 7 years, the market price can be equivalent to the book value, adjusted book value. So that means in next 6.5 years, if it gets same 4 times book value, the stock can even go up 4 times in next 6 to 7 years. So definitely you should hold. PVR Cinema, in the short term he can hold, but his time horizon is 15 to 20 years. I am not comfortable with the media stock for 15 to 20 years because there are a lot of ups and downs. Actually, this is the third point for his portfolio. He should not blindly hold any stock for 15 to 20 years because we have seen last 10 years huge structural changes happening in the economy and impacting even the large cap stocks. We have seen what happened to L&T in post Lehman crisis. Then we saw for Lupin, now Sun Pharma earlier. So he should not hold blindly. They need a continuous monitoring on a quarterly basis. And so I would suggest sell PVR Cinema and put it in HPCL. If he's talking about 15-20 years, that's the ideal stock. Because in India, the automobile population will continue to grow forever, considering the total population and growth. So which means the fuel offtake from the pump stations will continue to grow, and therefore demand for refinery products also will continue to grow for next 15-20 years. So this is the one single most ideal stock for him to invest. DHFL he can hold. Because recently they mobilized a lot of money, so there is a possibility of maintaining the growth momentum. So therefore, he can hold DHFL.
Okay, so a hold on HDFC Bank as well as DHFL, but PVR Cinemas, well, it may not be wise to hold that for 15-20 years. Instead, Mr. Chokkalingam advises that you could switch over to HPCL. But Mr. Chokkalingam, let's understand your view then on Asian Paints, Lupin as well as Aurobindo Pharma. Once again, he has an ultra long-term view.
Yeah, Asian Paint again would fit in, though I am negative on the stock in the short term because it is richly valued and now the growth has come down. We have seen the last week, the results also, the top line growth has come down to 10%. So therefore, in the short term, I am little negative, but definitely this company would fit in the frame of 15 to 20 years because India's construction sector will come back after some stressful time. And there will be a lot of consistent growth in the sector. Similarly, automobile sector also would continue to grow. So this is the ideal stock for that kind of time frame. Similarly, even Lupin is an ideal stock, even though the stock is going through tough time. But according to me, even for every investor, the Lupin is a buy now because the stock has already cracked from anywhere from 2400 to now 1250. So all negatives are priced in, and on 1 year forward earning also it is the cheapest stock now if you compare its own history or the peers. So even that can be held. Aurobindo Pharma, I have doubt because I am not that comfortable with the balance sheet. If you see the standalone basis September data, receivable and inventory, which is too high as a percentage of annual sales. And therefore, I would suggest that he converts that into MRF. This is another stock. In the last 15 years, it has created a phenomenal wealth for the investors. I am pretty confident that next 15 years, it will create again a phenomenal wealth because the equity is very small, and this is the only major tire company which is a net cash company. Most tire companies have considerable debt. So despite being a leader in the industry, it is not on net of cash. The debt is nothing. I mean, it's net of debt. The net cash is couple of thousand crores. So also it has got a huge reserves, and this is a company which I believe in 15-20 years will give a phenomenal return. Just as a disclosure, my company also has invested in MRF.
Okay, that's the advice coming in on the next set of stocks. Aurobindo Pharma, not the best of bets. Let's move right on and really chat about some of the mid-cap names which perhaps would be a bit disconcerting. Astra Micro at 120 rupees. What's the outlook here? Alpha Geo, do you like the stock? And Jain Irrigation, he's purchased it at 90 bucks.
Yeah, all these three stocks, in the short term, my views may be wrong also, but he has mentioned clearly 5-year investment horizon. If that is the investment horizon, these are not the ideal stock, because if you look back last 5 years, there has been a huge volatility in these stock prices, because of the business environment in which they operate or because of the leveraging. In fact, Alpha Geo in the 5-year low is around low double-digit figure. And Jain Irrigation has got a lot of leveraging. It has gone through a lot of ups and downs in the stock price. So therefore, for an investor to hold for 5 years, I would replace all these three stocks with names like JB Chemical, India Telelink and Balmalari Company. JB Chemical is the beautiful pharma company. Many people may be surprised to buy or recommend JB Chemical at this point in time because of the US FDA issues, but this company has got a very low exposure to US market. In my estimate, it is less than 20% and a cash rich company, and it is consistently growing in the domestic market in double digit most of the time. So therefore, I would suggest JB Chemical instead of Astro Micro. Second, India Telelink, it is one of the Birla Group companies, and it is engaged in telecom cable, particularly optic fiber cable. 3 years back, they got diversified into telecom projects, EPC projects, where the business they more than tripled in the 3.5 to 4 years. And lastly, this company has got massive investments in Birla Corp. The value of investments in Birla Corp is 2 times the market cap of India Tele. I am sure in next 5 years, there could be a lot of unlocking possibility. Even if that doesn't happen, the Birla Corp valuation itself can keep growing. So right now it is 50% discount. That discount can expand in a big way unless the market cap of India Telelink itself substantially increases. So therefore, I would suggest India Telelink. And third is a Balmalari company instead of Jain Irrigation for the next 5 years. Even this stock has created consistently a lot of wealth in the last 5 years. I am pretty confident that next 5 years it will create, because it's being a 150-year-old company, has got a lot of logistic infrastructure. In fact, this kind of logistic infrastructure no other private logistic company has in this country. And in case the government diverts the company completely, then this can become a phenomenal multi-bagger, which I will not rule out in the next 5 years. So therefore, I recommend these three stocks. And again, JB Chemical, we personally invested in the stock.
Okay, so very interesting names actually are being thrown up by Mr. Chokalingam. There's JB Chemicals, Vindhya Telelinks, and as well as Balmalari. All of them are actually buys instead of the Astra Microwave, Alpha Geo, as well as Jain Irrigation that you hold currently. But Mr. Chokalingam has a medium-term view. That's a 2 to 3 year time horizon for TRF, Power Grid, as well as PNC Infra. What's your view on these three?
You can hold Power Grid and PNC Infra. I looked at the fundamentals. Still, there is upside of 10-15%, but I am not comfortable with the TRF because if you look at the bottom line, it's under tremendous stress. As of September 30th, because March results are not yet available, if you look at the inventory and receivable also, it is as high as 90% of the annual sales. So therefore, I would suggest a sell on TRF and buy Jet Airways. As I mentioned earlier, next 1 to 2 years, I feel Jet Airways can create substantial wealth for the investors.
Okay, that's the advice coming in on the entire portfolio. I hope, Vinay, we were able to help you out. Do take note of a very important disclaimer that this is a model portfolio and you should consult your individual investment advisor before taking any investment decisions. We'll slip into a quick break right here on the show. Do stay with us as we've got Ruchir Jain and Mr. Chokalingam to share with us their top stock picks.
Welcome back. This is Buy Now, Sell Now weekend. Let's focus in on the markets. It certainly was a very active week this time around. In fact, for at least the last 4 out of the 5 sessions that we saw in this week, we did end in the green. And most importantly, we were able to cross over the 9,400 mark during the week. Mr. Chokalingam, let's understand your perspective on the market. Of course, we have seen the markets run up quite a bit. Do you think there will be some profit booking going forward?
Certainly. In fact, for 2 reasons. The total market cap of all BSE listed stock this week touched almost 127 lakh crore. And if you assume that, even just 1% of that comes for profit booking, which is about 1.27 lakh crore or around $20 billion, there is no appetite in the system. As per the last RBI's report, incremental household financial saving going into shares and debenture together is less than a lakh crore per annum. So I am a bit nervous because the appetite is not there. And second, on top of it, you are seeing lot of attempts to mobilize resources from the capital market. We have seen QIPs, we have seen Kotak Bank issue. Then we are seeing the proposals from the government to divest more stakes in the unlisted companies. Then we have seen infra companies mobilizing, or proposing around 16,000 crore. Then we have the insurance companies planning to mobilize. Then SBI also proposed. So all this, would lead to tremendous pressure on the liquidity in the capital market. And ultimately, the retail investors who are very active in the mid cap and small cap space, they would find a lot of pressure for liquidity and they would be forced to sell the shares. So if that happens, when the valuation company is not there in 70-80% of the mid cap stocks, so there can be a major fall. So therefore, my outlook on the market is that it would consolidate and keep rising, and I believe in long-term bull run, but in the short term, I expect severe correction in the mid cap. Therefore, this is the time to have a more tilt towards large cap and also create anywhere for 10 to 15% of the cash if investor is very conservative.
Okay, let's get in those trading ideas and recommendations going then. And Mr. Chokkalingam, highlight for us what are the top wealth creation ideas that you're advising? Yeah,
two stocks. One is Jet Airways, second is Claris Life Sciences. To be very brief on Jet Airways, the industry is in solid outperforming mode. The airline passenger traffic is growing in double digit for last 29 months in a row. It has been growing about 20%. Recently, it has come down to 16%. But that volume growth as compared to FMCG or any other business is fantastic. And I also have a very negative outlook on oil. It is likely to be in the range of $50 to $60 for next 2 years. I doubt whether the cartelization by OPEC and also OPEC and non-OPEC can continue. So these two factors favor airline industry. And particularly why I have chosen Jet Airways is that because it has got some accumulated losses, I looked at its enterprise value as well as net current liabilities. So even if you add net current liabilities to enterprise value, then take a ratio of annual sales, it's available at around 0.9 times as compared to 2.5 times Indigo is available. So what I'm trying to say is that when Indigo has got around 40,000 crore of market cap, Jet Airways is around 5,500 crore, and this gap is too wide in terms of the valuation. Definitely this gap would start narrowing down, not to the extent of 80-90%, but at least even 20-30%. That would be a big game changer for Jet Airways. And also Jet Airways proposed to get into digital marketing, and Jet Privilege has got a huge network of the right kind of target group. So all this augur well for the company. In 3 to 4 years, if it becomes a multi-bagger also, I won't be surprised. So therefore, I strongly recommend Jet Airways. The second idea is Claris Life Sciences. This company has proposed to sell injectable business for over 4,000 crore. Few days back, they also proposed to sell their stake in the joint venture with the Japanese partner for about 128 crore. So put together, 4,128 crore is nearly 2.3 times its market cap. In 2014, when they sold some business, they rewarded the shareholder in terms of doing a buyback at a substantial premium to the market price. They did at a 24% premium, and they used 20% of the proceeds of the sale of the business to reward the shareholder. Also, the dividend they increased by 4 times. Now, after informing the exchange that they are selling this injectable business, they given a press release that a majority part of this cash will go for repatriating to the shareholder. So even if they give only 20% of this money, it would be about 40% of the current market cap, which is a very big amount. So therefore, I believe that it has got an excellent potential to go at least 500 rupees, even though the cash proceeds will be more than 700 rupees per share. So therefore, I recommend Claris Life Sciences.
Okay, Jet Airways as well as Claris Life Sciences are what Mr. Chokkalingam recommends if you want to put your money in the equity markets for the long haul. But for those investors who have a more short-term time horizon, Richard, what would be some stocks you'd like to recommend?
2 recommendations that I would like to give from a trading perspective. One is Tata Steel. As I earlier said, most of the metal names after this recent corrective move are trading near the long-term support. Even if we see Tata Steel, then recently prices have corrected from its high of 515 levels to sub 450 now. Now, if you observe the longer term charts, then prices are right now trading near the 200-day simple moving average, which is a very strong support. Even the RSI smoother indicator has given a positive crossover on the lower side. Hence, it's indicating that the downside in the stock is much limited and there's probability of the resumption of the uptrend in Tata Steel. The risk reward is very much favorable to go long at current levels, so traders should look to buy Tata Steel around current levels. They can keep a stop loss below 418, expecting target around 475 in next 1 month. And my second pick would be to go long in Titagar Wagon. If you observe the daily charts or the weekly charts of Titagar Wagon, then recently after higher top, higher bottom structure formation, this stock has given a breakout from a long-term falling trendline resistance, and the breakout has also been supported by very high volume. So this is indicating that this stock has a good risk-reward ratio and the potential to go much higher from current levels. Traders should look to buy Titagar Wagon, keeping a stop loss below 120. We are expecting target around 147 in next 2 to 3 weeks of time frame. The disclosure is that I don't personally hold any of the stocks that we have recommended today, but the similar set of recommendations have been provided to our clients, so our clients may be having some holdings.
Okay, Mr. Chokalingam as well as Ruchit, we've got those ideas noted down. Thanks so much for taking time out and joining in, being with us today on the show and giving us your advice. With that, it's a wrap right here on the show. Thanks from Mubina, me and the entire team that put the show together for watching.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/etnow.